Hey everyone, I'm just here with Marko, who's one of my students, and he has got an awesome deal, which is making $500,000 profit by doing a duplex in Sydney. Welcome on, Marko.
Hi, Adam.
So Marko is based in Sydney, projects in Sydney. Marko is a builder, has been a builder for a little while, and he's still pretty young, as you can tell. And young family, all the same, struggles that we all have, juggling different things, work-life balance, kids, wife, and has managed to pick up a really good deal through just hustling and getting it done. So let's jump into it and show everyone what your deal is and all the ins and outs, the good, bad, and the ugly.
Yeah, basically from a relationship that I established with a real estate agent, I got offered a off-market property that one of the vendors for this particular real estate agent was wanting to sell. So basically the agent contacted me and we had a scope of, we went on site just to see the property and see what sort of value it could bring to us, since it was a good opportunity.
Yeah, don't give away too much just yet. We'll get to it. But so just overview, what are these, or what is this deal? What are these houses? I know they're a duplex, and but are they 4-bedroom? They look pretty amazing, quite substantial, and it's Sydney in a quite affluent suburb. So these things are worth a mint as well on completion.
So it's basically a detached duplex, double story, as you can see, four bedrooms, 3 bathrooms, pretty massive al fresco. It's got higher ceilings towards the back with flow-on effect, like from your lounge, your kitchen onto the al fresco area. With a double garage, since parking's a big thing there as well, with the families and the affluent schools in the area.
And you're going to build these as well, aren't you, as the builder? Is that right?
I'm not personally going to build it. No, not this time around. Maybe in the near future.
So for everyone that's listening, Marko is a builder, but he's not doing the construction. Hint, hint. You don't need to be a builder to make money from doing a new house build or doing a duplex.
Anyone can develop, as long as you got the right knowledge and skills, I guess. And you can always use a reputable builder to complete the projects for you.
Yeah, so I suppose the question is, for me and other people listening, why don't you want to do the build if you're the builder?
Look, number one, it's a time-consuming aspect of any development. You need to really have a big pull on all your suppliers to get the right pricing on your materials.
Yeah.
You're also liable. You got the home warranty insurance. It takes a big chunk out of your personal time and your working time if you've got other work that you're doing at the time of your development.
I've brought you over to the other side by the sounds, Marko. You're focusing on the profit from doing the actual build and being the deal maker versus being the builder. Is that right?
Yeah, correct. Just more flexible with time, and you can always concentrate on making the next deal happen.
Yeah.
Whether it's putting an option onto another future property that you want to develop and so forth.
Awesome. Yeah, so if you're listening, take note of what Marko's just said, because I find it really amazing how many people don't get that. So, I mean, if you are a builder and you have the capacity to do the build and it's just part of what you're already doing, then, go for it if that's what you want to do. But personally, that's not where my strong suit is, and I never wanted to be the builder. I was happy to outsource that. But I know some people do want to be the builder to control that process, and that's great as well. I think both work, but it's more about where is your focus. Is the focus on the build, because builders generally make 5 to 10% margin, some of them more, depending on the project, or is your focus on extracting developers' profits? So we'll jump to the next part and give us a rundown. So detached duplex, then I'll hand it back over to you.
Yeah, it's basically a detached duplex. It's originally a Battleaxe property. Before we got into the deal, we found out through council and the traffic engineer that we could put 2 driveways for the detached duplexes from the main road, which sort of sparked a fire within us to go ahead with the project, as you're creating like a new driveway access to the properties. In saying that, one of the properties will have 2 access points two driveways, should I say? One from the back, one from the front, and the one to the left will have its own driveway. It's 811 square meter block, so split into two, detached. So we're going to subdivide. So it's one into deal, and it's projected an average projection profit of just over $500,000.
Yeah, nice. And completion expected in late 2025.
Yeah, correct. Maybe just after, between July, August, somewhere around that time.
Okay. I call that mid 25. July or
Yeah,
mid to late.
yeah,
So
yeah, mid to late. Sorry, yeah.
so not too far away. And that projected profit, and when you start talking about the area, and I won't give away too much, but the area where Marco's developing in, I've looked at another couple of deals from Marco over the years, and this area is very tightly held, and people do pay a premium for properties, and it's an owner-occupied market. So I wouldn't be surprised if your forecast profit ends up changing. Like if this forecast profit ends up being a lot less than what you end up selling these for, knowing the market that you're in and also knowing that high owner occupied demographic in there in that area. So give us a rundown who you are and if people can relate to the same situation, or let us know where you live, or I shouldn't say exactly where you live, but
Yeah, well, basically, I'm from Sydney. I'm a builder carpenter by trade. I run my own company. Got a family with 3 kids, and just like every other person, hustling every day, working, doing what I've got to do.
yeah.
I've got obviously a big passion in anything to do with property because I've been immersed in the building industry since a teenager, and I've had a few mentors along the way, people that I've met that are successful, and I take a big liking, whether it's development, investing, and so on.
Yeah. So you've
I've done a couple of property flips, one a low end, one a high end. And after immersing myself into the development education platform, that's what really sparked the fire within, propelled me to actually do this project.
Yeah, cool. Good on you. So did you buy your first house in 2020? Well, that's when you just started getting
No,
property.
that's when I bought a property for investment purposes, for the purpose of renovating the house and making that profit, obviously after selling it with a renovated finish.
Yeah, okay. So that was the first time you kind of saw property as a way to make money. First,
Yeah, basically, pretty
something.
much.
Yeah, gotcha.
And then I've done another one maybe about 2 years ago. That was a bit more of a high end, so to speak, property flip, another renovation. And in saying that, my idea was, to accumulate a bit of profit so I could start the development journey.
Yeah, yeah. So you started off doing a couple of renos, and there's on the screen there. So you bought the first one for 520. So that was that in 2020?
Yeah, that was in 2020, like just during that, I think that was during the COVID year
Yeah. So you
when
turned.
all that happened. So it was a bit of a muck around with all the restrictions, but we still managed to get a good profit margin.
Yeah, so you made like a couple hundred grand on the first deal that you did, and you wouldn't have got hardly any market uplift either. Because I know people will be looking at the purchase price of 520 and you sold it 5 months later for 755 and spent 35 on the reno. But that was probably in the same market. You might have got a little bit of market uplift, but
A
like
little bit, yeah.
that's pretty exceptional to make a couple hundred grand on your first deal. And then you rolled into the other one in Miranda. And I remember you showing me this one a little while back. That might have been 2 years ago. Was it that
Yeah,
long? Probably was. Yeah, probably was when you
during
just
the
started.
time when I was doing it, pretty much.
Yeah. So you made good money out of both of those, and now you've stepped up into doing this duplex, which although it's a duplex, it's stepping up from doing a single house to now doing a multi-house.
And they're detached as well. Yeah.
Yeah. And you'll probably find, or you can tell people if you have found that this one, with the exception of your little hiccup with council, this one will probably be less work for you than the last two combined. Is that fair to say?
Yeah, it is fair. Obviously, all your background paperwork, that's probably a lot more harder, but
Yeah.
physically and, some other aspects, way easier. as long as you know the procedures
Yeah.
of the whole development cycle, you're good to go.
Yeah. So what's the plan from here on in? So I see you got NSL developments. I'm
Yeah, well,
guessing the kids' names. Is that a good guess? NSL?
yeah, they're the initials of my kids.
Yeah, there you go.
That's yeah, correct. Bingo.
Was a good guess.
Just to move forward, like to create myself a pipeline of many more projects to come. Stick with the 1 into 2s, 1 into 3s, and 100% in the near future, a lot more bigger, 10 plus subdivisions and developments, and anything in between, I guess, whatever deal comes up first.
Yeah, cool. And you're just looking into Sydney or you're looking elsewhere?
Look, as we all know in development, I mean, it's not bound to one state. You can go to any state as long as the numbers add up and there's a profit.
Yep.
Anything's a possibility. It is sometimes easier if it's in your backyard, but it's always possible to do things interstate.
Yeah. So for those guys that are in Sydney thinking the Sydney market's really expensive, or they don't think the Sydney market's going to go up, or whatever that reason is it going to be the same? And I think you've looked, I remember you showing me a deal or two in different states or different councils within Sydney. Is it going to be the same process? Is it going to be basically as easy to do something in Queensland or Victoria? Maybe not Victoria. They got a bazillion councils, but let's just pick Queensland because that's my favorite state at the moment. Is it?
Look, I think the procedures are basically the same. Obviously, there's different zoning, different environmental impacts, but in saying that, as long as you do your correct research,
Yeah.
it's essentially all the same procedures when it comes to development.
Yeah.
From my perspective.
Yeah. Agreed. At least in Australia, who knows what happens around the rest of the world? Some brown paper bags get you in.
Maybe a bit of corruption.
At least they don't have housing crisis, or maybe not to the same extent.
Yeah.
All right, so this is the house when you purchased it.
Yeah, correct. That's the one. Doesn't look like much.
Yeah, well, 1.4 million, that's what it gets you in Sydney, right? A knockdown, basically. So just to recap on like your progression of your deals. So you started off with buying a $500,000 property only 5 years ago, basically. And then you did up to doing the next one that was $1.2 million purchase. And then now you're at $1.4 million purchase. The way you're going, the next one will probably be around 2 million. But for those people, I suppose, looking in, if you haven't done, a build or you haven't done a renovation before, don't just look at somebody's deal like this one or like mine and think that that's going to be your first deal. I mean, if it is, fantastic, but generally it doesn't work like that. Like people want, like, especially with like social media now, like we see all of the flashy stuff that people have, but you haven't seen what it takes for those people to get there. Like we all have to start from somewhere, and that somewhere is like zero. We all start with no skill, no knowledge, and we've got to start from the ground up. And generally most people don't go and inherit a heap of money and go and drop 1.4 million on their first property purchase. So I think it's really great that you've gotten to this point in 5 years. It's probably felt like a long time, but you're probably just knowing how you've progressed in the last couple of years alone. You're probably right at that point where you're going to have like exponential growth here on. Like I think like you were saying before, you've realized that you don't have to be the builder, that you can leverage your time. And I think that this project is the turning point between you doing renovations and being the builder, and now realizing that you can exponentially grow.
Yeah, 100%.
That's just my observation, looking at what you've done.
Yeah,
but give us an insight. How did you get this property off market? You mentioned relationship at the start of the call. How did this?
Yeah, look, I've always had a vision. I've always had a vision in my mind to always create a relationship with the people that you want to work with. So it was my first real estate agent that sold one of the properties that I actually lived in, and it came into fruition that we became good friends, and I told him about my future plans, and he's like, "Yeah, no worries, Marco. I'll keep you in mind. If something ever comes up when the time is right, well, I'll give you a call." And he presented me with an off-market opportunity. In saying this, obviously, you can find deals that by yourself without using a real estate agent, but it just happened to be so that it was a good deal and it was off-market. So that's how I came about the deal.
Yeah. So what did that look like? Did he call you? Did you call him?
Yeah, no, he called me actually, and I'm like, yeah, no worries, we'll scope it out ASAP.
Yeah.
Obviously, you play the psychological game. You have to understand what that vendor really wants, what even the real estate. You have to juggle the two and then make a decision, do your feasibility study, and then see how much you can fork out maximum or minimum for the property. And to see if it's feasible, you just pull the trigger and you go.
Yeah. And were you the only buyer at that point? Did you have any other competition or no?
No, there was no competition at all. No, because like I said, I still believe your network is your net worth. So networking is a big part of development.
Yeah, cool.
And many other businesses in saying that.
Yeah, awesome. So you just had a great relationship. The guy called you. He knew you were a serious buyer.
Yeah,
And if it ticked all the boxes, you were going to buy it.
correct, 100%.
And who was the seller? Who owned the property? Why do they want to sell it off market? What problem were you solving for them by buying this?
Well, look, he's a single guy, recently retired, in saying that he wasn't that old, like in his 60s or whatever, and he wanted a change in his life where he just wanted to move out west somewhere in a different area, just with a more quiet area. And
Yeah.
his actual house was in a very bad state, so he was even embarrassed to have the real estate agent going inside. And you can see that he started to paint like the walls, the ceilings, and just to take that hassle away from him, we just gave him, with a price that he was happy with. We negotiated and we took all that stress off him, and he was able to move to his new property.
Yeah. So you
And that
want to
was
do open
basically it.
homes. A lot of people don't want to do open homes. I mean, it's pretty, if you think about your own home, if you're listening, whether you're a renter, like renting your property, or whether you own it, if you do an open home and there's 20 people turning up to the inspection, for example, especially in a hot market, there'll be at least 20 people. Like you got 20 strangers walking through your house. Like it's not a very pleasant experience. Not that I've ever done it with my own home, but I can just imagine it would not be a pleasant experience if that's your own home, listing it on the market or taking it to auction. So I can understand for people's peace of mind and not to stress. This is why people sell things off market, so they don't have to do that. Literally, you were the only person who inspected it by the sounds. You got to a
Yeah,
price that he was happy with, and you solved his problem. You bought it under market value, which you can tell us about in a sec. But somebody that's retiring, if he's got 1.4 million, who cares if he could have got an extra 100, 200 grand on market? Like for him, is it worth getting another 100 or 200 grand and going through all that stress? He would have had to clean the place up. He probably would have wanted to paint it. Like it might have cost him 100 grand to get it ready to sell. And then you're just going to put a bulldozer through it anyway, and probably somebody else.
yeah.
So tell us about the area, and I want to keep moving on to the other ones, but just why do you want to buy in Sutherland Shire? Why not buy anywhere else in Sydney? Why this little pocket that you're in?
First of all, very familiar with the area. I lived there a few years back. Also, it's a very affluent area for families. It's close to the beach, close to the eastern suburbs towards Sydney, not that far, and also towards the south coast. So it's sort of like in that middle zone. It's got one of the best schools as well. Not just one school, but many schools, whether it's primary to high school to
Yep.
other private and also it was very, very close to a shopping center as well. So
Okay. So
a
really
whole little
community.
shopping village. So just ticked all the boxes, including the public transport. Yeah, those were the main factors, and it's just an area where people just love to live. So it's a very popular area,
What
generally speaking.
what about supply?
Supply, yeah. Well, that was the biggest thing. So it's there's a there's not much supply, but it's high in demand, which always equals big bonus for any developer
Yeah.
to enter the market, whether it's in any suburb.
Yeah. Yeah. So tightly held shire.
Tightly held, yeah.
And I'm guessing there's not many new, well, I know the area somewhat.
Yeah.
There's not many new houses available. So
That's right. Look, it's not in a place where there's a lot of unit blocks either. So I stayed clear from any area where there's a lot of high rise density happening, because that creates a bit of competition and whatnot.
yeah, so really great tightly held area people want to live in, and there's not a huge supply of new properties. So you're solving a problem for people, and people will pay you handsomely for it. Oh, we already spoke about the off-market transaction. So why did you pick this one versus something else? I can see some of your.
Well, basically, during the whole negotiation process, I found out through council, that the zoning was the right zoning that I was looking for, which I was able to subdivide and do a 2-into-1. That was a plus. It could also be done using the CDC avenue instead of a DA avenue,
What's CDC? What does that stand for?
a compliant development certificate.
Okay. So for those people that don't know, it's basically a fast track tick and flick. So
It speeds up the process, basically, yeah. Get the development rolling.
it's done through a private certifier, isn't it?
Correct, yeah, private certifier.
Yeah. So it's basically the same application as a single house.
Yeah.
Yeah. So it's easy, it's known, and how long did it take to get the approval through?
It took about 2 months, I believe.
Oh, you say it as if it's such a long time.
No, it's not. It's not even that long.
Yeah, so really quick approval.
Yeah, pretty quick, pretty fast. Yeah,
And
wasn't that bad.
so basically the same approval as building a single house.
Yeah,
Yeah, awesome. And then tell us about the zoning, because you mentioned it there. Did you?
yeah, it was 2 zoning, which means I can build a 2-into-1 on the block of land, and
1 into 2, you mean?
yeah, sorry, 1-into-2, yeah,
Yeah.
which is, and I can put it on a title each block, meaning like it becomes 2 separate titles,
Yeah, gotcha.
which was a big bonus for me because that's what I was looking for.
Yeah, that's huge.
Another big benefit was, well, at the time, the traffic engineer and the council, they've approved from the main road to build a driveway, like 2 separate driveways for the new properties that were going to be built. So that also made it a big bonus to upscale the value of the property and to make the design easier, as it is a battle axe entrance from the back of the property.
Yeah.
Another good aspect of this property was that it was about between 30 and 32 meter frontage. So there was a lot of room to play, which I was able to put the 2 detached duplexes on.
Yeah, nice.
It had a pretty big frontage.
So this last point as well about the land itself, you said it's only got a slight slope, no trees, and no troublesome easements. How important is that? How many have you looked at?
Oh, look, it's very important. Sometimes the easements can be where you want to build, and you have to move things, and it becomes a big headache, more expensive. Your expenses rise.
Yeah.
When things are sort of out of the way, a lot more easier to move and
Yeah, so
build.
easements, for if you don't know, an easement gets placed over like a stormwater pipe or a sewer pipe. And if you need to move the easement because you want to build there, you have to move the pipe that's underneath. And sometimes that can be really expensive. Or I think in any case, it's going to be expensive. Or you just don't build over that easement, which might mean that your design of your building is a bit quirky.
Yeah.
Oh, I already asked you about the area. You've got it on this slide. Sorry about that. Or do a recap.
Do a recap.
You know it offhand.
The actual deal again. Recap it again.
No, just the area. Just give us a 30-second recap on the area. So
Yeah, it's just a popular area of Sydney, very family focused.
yeah. So it's
near
Bangor?
beaches. It's a leafy suburb.
Do you
Excellent
pronounce it
school.
Bangor?
Yeah, Bangor. Yeah.
Bangor. Okay. So Sutherland Shire and Bangor. I don't think we haven't actually said those people that are listening on the podcast, and we actually haven't said the suburb name. So it's Bangor.
Yeah, that's right. So yeah, close to shops and beaches, just a all around good area.
So you're 25
The
minutes to the
popular area.
beach, 30 minutes to the city. It's pretty good.
Low stock, but high demand.
Yeah. Yeah, it's a capped area, as in capped supply,
Yeah.
where there's a lot of existing houses that have been split over the last however many years, 50 years, 100 years. And now people are forced to do similar to what you're doing. So it's basically knock down rebuilds or knock down one into two. There's probably some bigger developments you can do, but and I have noticed there are some areas, there's some pockets that do have high-rise zoning, but it's far and few between. So it's not going to be oversupplied anytime soon. Probably never will be oversupplied this area.
Yeah.
So yeah, great area, not only for short term, but I think long-term gains. I think if you're going to hold a property, if you can generate enough rental income from it, I think it's going to be a good long-term strategy as well for buy and hold in these areas. Capital city of Australia, or capital in terms of population numbers. There's always going to be a demand close to the city, and if the amenity is that good, people are just going to keep bidding the price up as property overall just keeps getting more expensive. So that's the before and the after, like we saw in the first one. So it's good. The design of the after, like you've got the same duplex replicated so you can get that scale, like the scale of economy with the design. So it's the same design, but you've changed out, well, your design has changed out the facade so they don't look identical. So
Yeah, correct. Yeah.
is that something that you told them to do?
Yeah, I did from my perspective, just to give it a little bit of a different feel, so they're more like separate type of houses in a way. Obviously, you can tell that they are similar, but gives it a bit of a different feel, different
Yeah,
touch.
yeah, yeah. So you got one's black, one's white.
Keep it simple, like neutral colors.
Yeah,
Have
yeah,
that timber effect. Give it
yeah.
a bit of that natural, beachy, modern type of feel.
One of them's got a curved window over the front door, and the other one's got a square window over the front door.
Yeah, that's on the top. Yeah, just to give it a bit of a different feel.
Yeah. So the deal structure. So you said you purchased in a company because you plan on keep going with more developments. Tell us a little bit about the purchasing structure, just high level.
Basically, yeah. The reason I bought in a company, well, number one, it's going to be my bread and butter for now and the future. The tax benefits also come into play, as I'm not going to live in it. And plus my branding, which is very important to me. Trying to create a brand so people know who I am and what I'm about, what I'm planning to do in the future,
Yeah,
and
yeah.
just to keep the ball rolling.
Yeah. So company tax rates for those people and listening, 25, if you're in a trading company like this one, is the tax on profits would be 25%. It's because this is a project that it's to make a profit. So you got to pay GST on the end. So you got to take that into account as well. But if you get taxed, so Marco, you're going to end up with, whatever it is, 500,000, or if it ends up being more, $1 million of profit to deal with. And you definitely do not want to deal with that in your personal name. And similarly with a trust, if people talk about buying properties in trust, and there's different circumstances, but generally, if you buy a property development in a trust, if you got $1 million, you got to distribute that money to the beneficiaries of the trust. There's other ways around it, but just simply, and trying to distribute $1 million or $500,000 to individuals is going to be quite hard. You'll still be at that top tier tax bracket. So companies, in my experience, are easy. You're like 25% tax. You just pay a quarter in tax and then you move on, and you don't have to worry about distributing to individuals. You can do a little bit of tax tweaking and all that stuff, but generally I find companies, that's what I do all my developments in. This company as well, and mine are in a consolidated group because I've got multiple, but that's another discussion. So give us a rundown on the numbers.
Numbers, so basically purchased for 1,425. Purchased it maybe about 75,000 below market value. So that helped a little bit. And the estimated profit, it's roughly about 540. That's a conservative
Yeah.
number because I'm being conservative. I don't want to always think the highest and the best, but
Yep. What do you reckon? What do you reckon it's worth now that you've got the approval?
that's a very good question.
So
I haven't really thought about what it would be worth with the CDC approval and the plans.
So just
But
just to give
it'll be
people an
worth way more. Or I reckon maybe over maybe up to close to 2 million. Easy, I think.
yeah. So
Roughly, I'm just talking roughly. Yeah.
the reason I ask is because not everyone wants to do the build on
Mhm.
anything, because you got the build risk, you got the time to do the build. And I do harp on about construction's only like stage 6 of a 7-stage process. The money's made before you even get to construction. So you bought it 75 under market value at the time. And how many months ago was that? Was that about 4 months ago, give or take?
Yeah, give or take, maybe a bit more, because also the negotiating stage, and the biggest thing was the vendor decided to live there, so I didn't have to give him the money straight away. So he gave me that whole time to work
Oh,
on my
wow.
CDC. So it was a big win for me.
So
Very
you
big
got the
win for me.
approval before you even purchased it, before you.
Yeah, correct. Just as I got my CDC approved, maybe a week later, we settled, or 2 weeks
Yeah,
later.
wow. So in other words, by the time you had to actually outlay any substantial money, it was probably worth 2 million. It's probably worth 500,000 more at that point anyway.
Yeah,
Obviously, you got to minus the costs of getting the approval and all that stuff. So it's not like $500,000 clear profit,
yeah, of course.
but ultimately probably added $500,000 of value in what, 2 months? You said it took you to get the approval, and you didn't even own it at that point.
Yeah, correct.
Yeah, that's pretty awesome. That's a pretty good hourly rate right there.
Yeah.
But not to gloss it over too much, like this deal, I know you've been looking for deals for, like, before you got this one, for probably 12 months, right?
Yeah, correct. Yeah.
Yeah, so it's not just like this deal came along next day and you snapped it up and you made $500,000 in a few months. There's been a bit of time that's gone into it. But from experience, what you'll find and what other people will find is once you find one deal, the work you've done for that previous 12 months doesn't go unrecognized. You'll end up having all these other deals trickle through as well, and you just build the momentum.
Yeah.
So to get to your 500 odd $1,000 profit, what's the costs in between?
Well, basically, you got the soft costs, about 530 grand. Hard costs, that's about 1.5 mil, including your 5% allowance for your contingency.
Yeah.
And yeah, so the total cost of all that is about 3.4, just that. And the profit, like I said before, conservatively, about 540 plus.
Yes. So you'll sell each of these houses for about 2 mil each.
Correct, yeah.
Yeah, gotcha. And then for people that don't know, so like soft costs are the things you can't see. So that'll be stamp duty, holding costs, interest, council fees. What else is in there? GST. So that's 530,000, which it actually seems like a lot for this size property. I'm surprised it's that high, but maybe that number is very
There,
conservative.
there's, there's reasons for that, because like I've had a bit of money injected, and plus the interest on top of that. So yeah.
Yeah, okay. So
That's the reason. It's not really my soft costs are a bit different to your normal soft costs, because I've got like a bit of an investment from an external source,
okay.
some
Oh,
interest on that. So yeah,
yeah. So money partner or other hire.
yeah, like close associate, but I
Yeah.
use it as a money partner.
Yeah, cool. Okay. And then the hard cost, the 1.5 million. So you're basically allowing 750,000 build per house, and that's got to
Yeah,
include all the service connections, the driveways, new fencing. So basically turnkey, which
yeah,
seems reasonable. You can get a decent 4-bedroom house built for 750 grand.
yeah,
Yeah, and you're building two. You got to remember, you're not just building one. For everyone that's listening, like, you're building two, so you get scale of economy. So you're gonna be able to build them cheaper because you got two side by side that are the same. So they just order double of everything, with the exception of a few little tweaks here and there, and they'll probably build them at the same time as well. So when the tradesmen come, they'll come and fit two roller doors. They'll fit two doors. The painter will paint out. He'll be there painting when he's there. So it's way easier for the builder to do that. So you get the costs down because you're building two instead of one. So back over to you, Marko.
yeah. So the lessons that I've learned throughout this project, basically, you have to talk to a town planner. And I'm not talking about the council planner. I'm talking about
Yeah.
like a proper private town planner. Why do I say that? Is because you can actually find out everything about the property just in case you miss something, whether it's your easement, whether it's you can and cannot do.
Yeah.
He'll give you that guideline, and at least you got the proper answers in your hands rather than, talking to council, just the council, for example. What else? Yeah, think about the product that you're trying to achieve. And what I mean by that is, the design and the design aspect of your property. Like, there's so many things that you need to understand, like what type of kitchen do you want? Like, do you want a double garage? What type of finishes? What type of... It starts to become a bit of a headache in that department. So it's good to have like a bit of an idea. What's the latest trend going on in that suburb? Is it a beach look? Is it a rural look? What can you get away with? Do you keep neutral colors? Do you, things of that nature? And also, last but not least, like all your contribution fees, as Adam knows, during builds, you can be sprung up with a cost. We have to change this or we have to do that, and that's going to cost you, extra money and time. And yeah, these are the things that I've learned through this process.
Yeah. And I'm sure plenty more.
And plenty more, yeah. It's always like development or anything to do with building and development. It's an ongoing learning process. And all councils can change things, governments can change things. Like I just mentioned, contributions, they can always change. So keep an eye out for everything.
Yep. Yep. Also experienced that. They just change the goalposts on you, but it is what it is. That's why you have contingencies.
Yeah, correct.
And so you wrap up. What advice would you give to somebody starting in property?
Look, without no risk, there is no reward. That's what I always say. You got to take your chances and go all in. And if you do go all in, it's got to be 100%.
Yeah.
On top of that, another thing to mention is you have to know your market area. Like, I had my pros of why I chose my project, that it's close to, good schools, it's a popular suburb, it's, high in demand, not enough supply. Get that nailed down, very important. And also, like I mentioned before, your network is your net worth. Obviously there's many ways of acquiring a property, but having the right connections, talking to the right people, meeting council members, players, other builders, it all helps along, the whole journey, the whole process. And last but not least, 100% get yourself educated, because there's always things are evolving, changing, and even without the changes, it's very important to know the whole process. And that's a big win for anyone that's going to do any type of development, is get educated and, going to the networking events, seminars and courses, and,
Yeah, just make sure you do
all
more
of the above.
for everyone that's
Yeah. And that was a big thing too, being in this course, because it's a step-by-step approach. It's very easy to follow the whole procedure. It's all outlined, and I started looking into this whole thing probably halfway through the course, which made it a lot easier. There's a lot of things that you have to, throughout the journey of development.
yeah, a lot of boxes to tick that people
Yeah.
grew up.
Yeah, a lot of boxes.
Or they think it's easy,
Yeah.
which it is once you know what you're doing. It's like anything, right?
Yeah, that's right.
I was,
It's like, you got a bicycle, but you always have to learn. You have to learn how to balance yourself, and that's what life is. You got to have that balance. You got
yeah.
to learn the hard way, but the more education you get, I mean, you're still going to make mistakes. Don't get me wrong, but it makes it a lot easier.
Yeah.
And your networking is very important, and having the right team on your side.
Yeah. Yeah. The difference is mistakes in this game can cost you 100 grand, or can make you 100 grand if you don't
Even more, yeah.
avoid them.
Either can go both ways.
Yeah, yeah. I use the analogy of surfing. I wanted to learn how to surf, and when we moved to the coast, we ended up hiring this guy to teach us how to surf because I tried to surf. So, you can try and do property and you can get it wrong, and eventually you might get it right. It just might take you a decade or 2 decades. But for a lot of people, they don't. They never get there. That's the reality. That's why not many people own more than like one investment property, because they don't ever get there. So same with like surfing. If you don't know how to surf, and sort of not really served in my life. So the guy we had coaching us was the like Brazilian champion for like 3 years running. And I had a coach before him, and he was like this 19-year-old guy, kid who could surf. And I can tell you the difference between learning from a 19-year-old guy that just surfs casually, that's trying to teach, versus learning from a guy that was, I think he was about 40, ex-national champion, multi-years running. It was completely worlds apart. The young kid, after a few lessons, I couldn't even bloody surf. I could hardly
Yeah.
stand up. Multinational champion. After like the first lesson, I was way better in his first session than what I was after like 3 sessions with the kid. With all due respect to 9-year-old kids
Mm.
that surf. But that's honestly, that's the difference. If you want to actually get good at something, go and find somebody who's actually doing it and not somebody who pretends that they're doing it. With all due respect to all the other course promoters, there are some good ones out there, but learn from somebody who's actually going to do it because it's going to accelerate you so much faster. Marco, agree with that? Disagree?
Yeah.
Have you done any other courses other than mine? I know I'd like to take 100% of the gratitude for your success.
Like I've been part of like there was one flipping course that I've done, but that's after I've done yours. That's about it so far.
Yeah, okay.
Just mainly like just go to seminars and things like that.
Yeah, so just network.
Obviously, we're different state. You're in Queensland. I'm in New South Wales. In every state, I mean, they've got different things. So, but the actual course for development, I did your one. So far to date, I've done your one. Yeah.
Yeah. Has it helped you with all the other stuff that you're doing? Because I know there's a lot
Oh,
in my development course that aren't doing developments. I might be
100.
doing renovations or buy and hold or whatever.
Yeah. Oh, look, 100%. At the end of the day, in my belief, Adam, it all crosses over to
Yeah.
one way or another. They're all very similar principles, and you know what you learn in your legals and your tax and your company structure. Well, that's going to help you whether you're flipping, whether you're building, whether you're. It's knowledge for it's all around knowledge basically,
Yeah, agreed.
including all your steps. I mean, and don't forget, you don't have to be a builder to be a developer, like we talked earlier. You know, you
Yeah,
can free up your time, concentrate on the paperwork, which is where you explain that in theory and in practice as you do your own developments as well.
yeah,
So
yeah.
you can't go wrong with that. You gotta say something to believe it, and yeah, you're one of those people.
Thanks, Marco.
No worries, mate.
I was I was saying to you before about like this developer that just put their pricing up and understanding the development cycle and that developers set pricing. And if you can grasp the knowledge of knowing what a development costs. So if you know, for example, that a new development is going up next to you and their cost of the land plus the build plus all the other costs is going to mean that each property they have to sell for at least $1 million and there's no other supply and people can afford to pay that $1 million, then that's going to be a telltale sign for what's to come with pricing in the market. So the example I gave to you, Marco, when we were talking before, Stockland bought this land estate and costs have gone up. And Stockland have also got higher costs because they've got big offices and a lot of staff and they're ASX listed and all that stuff. So they just put the prices up overnight by basically $100,000, which is about 20%. And what that is going to mean, and I could see this coming. I was pretty shocked that they did it in one go. I thought they'd kind of do it incrementally. But I knew that that was coming. So what opportunity it creates now is to get into a market, not necessarily to do the development, but to get into a market and buy from either another surrounding developer, 100 grand less, or even knowing that they've just put it up, chances are they're going to put it up by another 20% because they can. There's no supply. The area's in a growth cycle and their costs of development are slowly growing. But if you can work out what those costs of development are, then you have a much better concept and grasp as to what the end values are going to be. And that's the same on your project. Like, you know, your build price is $750,000 plus the land, plus the other stuff. So, you know, to make margin, you need to sell these for 2 million as a minimum.
Yep.
So if somebody goes and buys a house next door to this and they see that you're going to sell these things for 2 million and they've just bought a house next door for say $1 million, they can do a renovation and that house that they bought for $1 million, now all of a sudden it's next door to a $2 million property. So that $1 million house, it's just going to grow in value. So you're doing the same thing that Stockland did, but on a smaller scale. You're creating this brand new,
Yeah, pretty much.
you're creating this brand new product that's going to make your neighbor's house go up in value. And I've had a joke to a few of my neighbors over the years to say, my development's going to make your property go up in value by like a couple $100 grand. And they never believe me over the years. But it's true, because the properties I'm delivering are better than the surrounding ones because they're new. The design is good. Same with yours. And it means they're creating a premium product that will raise the value of the surrounding properties based on valuation principles. But people don't understand that. Unfortunately, it can go the other way as well. If you build the housing commission next to nice houses, then it can have the opposite effect. It can bring the values down. So the same as it can bring values up, it can also bring values down. So thanks so much for sharing your real deal with us, Marko. And everyone listening is really inspired. I am, by hearing your story, where you've come from over the last 5 years. I'm starting with a $1,000 house, now doing basically a $4 million development, and you're on your way to doing a lot more. So thanks so much for sharing. Really appreciate it. And if you've got any questions for Marko, throw them in the comments or wherever you see the video, and Marko will happily answer them for you. And if you want to invest with Marko in his next project,
you're more than welcome.
Then we might put your email in the details as well, if you're happy for me to do that.
Yeah, no worries.
All right, cool. Thanks so much.
No, my pleasure.